Over the years, several Tesla analysts and bulls have cited numerous growth opportunities for Tesla, even as far as 2030. The automaker has been performing incredibly well, beating down the competition and consistently increasing its revenue and profit margin. If you're a Tesla investor, then you should know that there is little that can hold the EV maker back from achieving its goals. So, if you're yet to load up on more Tesla shares, now may be the time to do so, as there is a $1 trillion opportunity coming for Tesla and it promises to be huge for the car company and its investors. Hey everyone, welcome back to Tesla Tomorrow. Tesla is doing its best to lower the cost of producing its cars and consequently reduce the price of its EVs. During a previous Goldman Sachs tech conference in San Francisco, Tesla's head of investor relations, Martin Viecha, disclosed that Tesla has already begun its manufacturing improvements, which are crucial for scaling EV production to mass market levels. According to Viecha, the optimization in Tesla's production assembly process will allow the automaker to slash its production cost per vehicle from a whopping $84,000 in 2017 to just $36,000 in recent quarters. Tesla leveraged new production techniques and a new factory design to optimize production and reduce the time needed to build cars. The car company also began to remodify its EVs by removing some parts that its EVs can do without, such as the USS, which takes up a significant part of Tesla's production budget. Why should investors buy more Tesla shares? Keep watching to find out, but before we get into it, if you like this type of content, don't forget to like and subscribe, and turn on notifications to keep up to date on everything going on with Tesla. Tesla's energy business is a big goldmine yet to be tapped. It has been thriving over the years and is growing faster. The automaker disclosed in a previous quarterly letter to shareholders that it developed 1,100 megawatt hours of energy storage, up 62% year over year, which was by far the highest level of energy storage developments that it's ever achieved. And to better address the fast-growing market for its energy storage business, Tesla said it was ramping up production at its factory in Lathrop, California. While speaking on energy demand, ARK Invest Cathie Wood stated that the demand for crude oil may have peaked in 2019 at 100.5 million barrels a day, particularly now EVs are taking a share of the total auto sales and ride-hailing companies like Uber are partnering with rental car companies like Hertz to rent EVs. She cited Hertz's statement that EV maintenance costs are 50 to 60% lower than those for gas-powered cars. According to ARK's research, autonomous electric vehicles could lower oil demands by 25 to 30% to 72.6 million barrels per day in 2030, thanks to their high utilization rate compared to personal cars. Tesla's solar business is also a potential driver for the company's growth. In 2021, the company reported $801 million in revenue from its energy generation and storage business, which includes three main products: solar, its Powerwall storage device, as well as its Megapack. Although Tesla has not yet fully focused on its solar business, there will still be opportunities to fully optimize the business in the future. In a previous interview, Musk confirmed that Tesla is looking to make a lower-priced car. Based on previous statements, this will likely be a China-designed 20K to 35K smaller EV. It would also likely be a human-driven and robotaxi platform. During the conference that followed the publication of Tesla's financial results for the third quarter of 2022, Musk also reiterated Tesla's plan to produce cheaper cars. After having completed the development of the Semi and the Cybertruck, Tesla has focused on the development of a new platform for the next generation of electric cars, which will reduce production costs and make electric cars cheaper. According to Musk, this new platform will serve as the basis for an electric car smaller than the Model 3 and also cheaper. The goal for this platform is to reduce Tesla's production costs by 50% as compared to a Model 3 or Model Y, and this reduction also includes less need for labor and space within the factory facilities. Musk also stated that with this new platform, Tesla intends to manufacture a greater number of cars than all other Tesla vehicles together. This would mean manufacturing more than 1 million units a year of its most affordable electric car, although at the moment there is no specific date marked for its production. Tesla has become one of the world's most profitable businesses, and this can be greatly attributed to its ability to lower its cost of production and increase revenue through sales. For a car company, several factors contribute to the total cost of their vehicles. This include maintenance cost, human cost, and for internal combustion engine vehicles, diesel or gas cost. With Tesla's EVs, as well as its Semi, this cost is significantly reduced. Diesel fuel is one of the biggest operating expenses for trucking companies, and contributes hugely to the cost of owning one of these cars. However, with the Semi, this extra cost can be easily avoided. Likewise, diesel soot accounts for a large portion of known airborne carcinogens, and so, by replacing aging diesel vehicles with EVs, these issues can be avoided. According to Tesla, a fully electric Semi will cost considerably less to operate per mile. Likewise, with Tesla, maintenance cost is significantly lowered. period. This could save truck owners from spending much more aside from the initial cost of purchasing these cars. In 2017, Tesla announced that the expected base price for a truck with 300 miles range would start at $150,000, with the 500-mile range version starting at $180,000. For truck owners, this could be a viable investment that will save them tons of maintenance cost in the future. Also, if Tesla incorporates autonomy into its semi-truck, then it could also be bypassing human cost for its EVs. This will be the point where truck owners won't need human drivers for these cars. One other reason why the Tesla Semi will be huge is that it has a high level of safety. For Tesla, safety is key, which is why the Tesla Semi may have a better market advantage than its competitors in this respect. The Tesla Semi's electric motor drivetrain, which is computer controlled and can respond rapidly, offers advantages in traction and stability control to make trucks safer for anyone on the road. The truck's software control system can also stop a truck from jackknifing. Tesla's semi-truck can significantly take advantage of its unique electric drivetrain, which includes independent motors for each of the wheels. The truck can sense distribution of weight across those wheels and actuate the motors or brake them accordingly to maximize traction control, and automatically correct for things like oversteer in response to weight shifts. The increased rollout of this vehicle will only add to Tesla's already robust profit margin. There are several reasons why Tesla's profit per delivery should stay at $10,000 by 2030 or even higher, which will further increase its profit per year and price to earnings multiple. Musk had previously stated that the car company is planning to produce 20 million cars by 2030. If it does produce this number, and also sorts out its delivery issues, then revenue could go even higher. Tesla also plans to produce millions of these robots, selling them for less than $20,000 each. He further stated that he sees the Tesla bot as an incredible innovation in 5 or 10 years from now. If Tesla can scale up the production of Optimus and also increase the rollout of its FSD software, it could make massive revenue in the future. Aside from the FSD and Optimus technologies, Tesla could also earn significant profits from its robotaxi and semi-trucks. Tesla investor and bull Leo Koguin has said that Tesla could produce its own small robotaxi with 200% profit per year by selling the vehicle at $100,000 per FSD to private owners and collecting up to 20 to 40% fees. Koguin claims that he is extra bullish in the future, adding that Tesla's market cap will be more than that of Apple and Aramco combined. Musk also said the same after Tesla released its earnings for the third quarter of 2022. At a previous earnings call, Musk stated that he believes that Tesla can far exceed Apple's current market cap, adding that he can see a potential path for Tesla to be worth more than Apple and Saudi Aramco combined. While Musk said that he doesn't expect this to be easy or to even happen anytime soon, he predicts that the car company will be roughly twice the value of Saudi Aramco in the future. For years now, Musk has said that Tesla would gradually keep increasing the price of its full self-driving package as functionality improves, leading to the actual final form of the product, which is the capacity to fully drive autonomously. Likewise, Musk also spoke about Tesla's Gigafactory autonomy and the automaker's plans to build EVs that can drive for 50 to 60 hours instead of 10 to 12 hours a week. About Tesla growth potential, Musk stated that Tesla plans to hit a 50% growth rate in the future. In 2020, the car company stated that over a multi-year horizon, it expects to achieve 50% average annual growth in vehicle deliveries. It further stated that the rate of growth will depend on its equipment capacity, factory uptime, operational efficiency, and the capacity and stability of the supply chain. Tesla's CFO Zachary Kirkhorn has also indicated that the 50% growth target is a multi-year average, where some years will see faster growth than others. On the other hand, some analysts believe that while Tesla is still likely to achieve its 50% production growth target, the company may not be able to achieve its 50% delivery growth target. Do you think investors should keep buying more Tesla shares? Let us know down below. And if you want to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.